yes, I remain very bullish for this year on all risk assets. I don't have any structural issues with the US economy. I am not an inflationist. The business cycle, when it picks up, will create some inflation again because oil prices will eventually rise and stuff like that. But I'm not an inflationist.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal will talk about Bitcoin and crypto price predictions, Trump's economic plans and global trade, plus why this is a golden bull market for investors. Let's catch him up to know more.
We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. And it wasn't actually massively put in by the US. It was actually China last time. And I think we might see that again this time, where China is going to play an important role in global liquidity. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017.
So if I use similar numbers, let's just use round numbers. It's at 100,000. You see it pulling back 25% to 75, and then take off.
Probably again. Not even. I don't think it goes down 25% because there's ETFs and there's the market is more mature. So let's say let's say 90,000. So it goes from 100 and where did it get to? 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know. So I always kind of give a probabilistic tree of, these are the kinds of zones.
Bitcoin dropped below $100,000 on February 4 amid renewed trade war tensions, shaking investor confidence after a remarkable rebound. The digital currency had briefly surged over $10,000 in a single day, fueled by news of delayed tariffs on Mexico and Canada, and an unprecedented executive order aimed at boosting the nation's digital asset leadership. However, China's retaliatory measures against U.S. tariffs on oil, coal, and other key commodities cooled the rally. Analysts remain optimistic despite the setback, suggesting that as long as Bitcoin stays above $93,000, a new all-time high might be within reach. Experienced traders believe that the recent volatility could lead to the formation of a short-term range before another upward breakout. Adding to the bullish signals, rare negative funding rates on Bitcoin futures have boosted market sentiment, underscoring confidence in Bitcoin's long-term potential even during choppy trading sessions. Investors and analysts alike are watching every move closely.
The economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US as the best guide, has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on, debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy's been sluggish. Globally, Europe's slow. They haven't picked up yet either. The UK's a bit of a mess. Canada's slow. And then we go to China, and China's got a full-on debt deflation playing out. So bond yields are collapsing. They can't stimulate because their currency's too weak and they don't want to lose control of their currency. Everybody's desperate for the US to weaken the dollar because the dollar's way too strong for everybody. So the strong dollar usually slows the global cycle. Now Trump's coming in. the probability is he'll do the same as he did last time, which was the dollar's too strong, because the US needs to export goods. And a strong dollar means less exports, which means a larger trade deficit. So we're kind of a little bit in this no man's land where everything is slow. All the forward-looking indicators of the economy are suggesting, because the liquidity that went in and financial conditions over the last 6 months, they tend to be forward-leading, suggest that the economy should pick up significantly this year. Now, China's the one problem child. We have to, as I said, see the dollar weaken, but also the Chinese need room to stimulate. I think that bifurcation of the two different worlds people live in is real. You know, don't forget the average person is dealing with very high mortgage rates, very high credit card debt interest rates. They're dealing with still low cash flows from their regular businesses. You know, we're not talking about tech giants here who are changing the world. We're just talking about people who run small local businesses. It's still not great. And, you know, we have to get rates lower and stuff for that to happen. And the inflation, yes, the rate of inflation's come down, but the price is stuck. You know, it's still sticker shock every time you go anywhere for dinner. You're like, oh my God, how did this happen? These prices have doubled. So that's a real problem. And what we need is the economy to grow. Now, Trump and his team know this. Scott Bessent's somebody I've known for a long time because he was an ex-hedge fund guy, and he's a friend of mine. I haven't spoken to him for a while, but he understands what needs to be done, and that's we need to get growth. So growth to me is, yes, you need to get interest rates lower. Yes, you need to get the dollar lower. Yes, you need to stimulate the US economy. You need to deregulate the economy. So all of those things on a forward basis suggest that the economy will be much stronger. Whether GDP changes much below, trend rate of GDP growth roughly is about 2% or just below it. We've been trending higher recently. Do we go much higher? Do we have a few periods of 3.5% growth? Maybe, probable. When you have a new administration, there's tax cuts, there's all of that stuff. You tend to do that, and Trump is very driven by the economy more than anything else. So I'm optimistic. Do the Europeans manage to get their shit together or not? That's a different issue, because they are doing the opposite. They just keep increasing regulation, increasing tax, making it harder for people. But they have the difference. They have a social security net, so it's a different structural system. And then we do need China, because China buys goods from abroad. They don't just sell them to us. They also buy stuff from us. And if they're on their knees with their economy, they're going to be buying less goods. So we need the global economic system to get fired up. So we need the US Trump to do what he's suggesting he's doing and allow the Chinese to figure out what they need to do.
Ethereum surged past $2,900, riding a wave of renewed investor confidence after former U.S. President Donald Trump paused proposed tariffs on Canada and Mexico. The rally gained further momentum when Eric Trump, an active figure in the Trump family's World Financial Liberty platform, publicly endorsed Ethereum. In a bold post to his 5.4 million followers on X, he declared, "It's a great time to add $Ethereum." While he later edited the post to remove the phrase, "You can thank me later," the message had already sparked excitement among traders. The cryptocurrency market had been rattled just days before, as news of Trump's proposed tariffs triggered a sharp sell-off. Ethereum plummeted 16% in just 1 hour, crashing to a local low of $2,368. However, as negotiations with Canada and Mexico calmed fears, Ethereum rebounded to $2,700, and Eric Trump's public endorsement seemed to accelerate the climb, briefly pushing the price to $2,913 before settling around $2,806. Adding fuel to the fire, the Trump family's World Liberty financial platform made major crypto moves. On February 3, blockchain analytics firm Spot On-Chain revealed that DWLF had transferred over $307 million worth of assets to Coinbase's custody platform. Additionally, the firm unstaked nearly 20,000 Lido-staked Ethereum and converted it into regular Ethereum, while also spending $5 million worth of USTC to acquire 1,826 Ethereum at $2,738 per coin. These actions led analysts to speculate that the funds could be used to support DWLF's upcoming Earn and Borrow lending protocol, which has yet to launch. Beyond these immediate price swings, Ethereum's long-term outlook is also shifting. The Ethereum Foundation recently announced plans to bolster its decentralized finance ecosystem by staking 50,000 Ethereum. This move aims to generate staking rewards that could sustain the foundation's budget while reducing selling pressure, a factor some blame for Ethereum's lagging price performance during this bull cycle. Meanwhile, Etherealize, a new marketing firm dedicated to Ethereum, launched on January 22 with a mission to bring Ethereum's investment potential to Wall Street. As institutions increasingly turn their attention to crypto, Ethereum's position as a cornerstone of decentralized finance continues to strengthen. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.